in the current landscape of available monies, I generally view Bitcoin the most favorably. I think most of the payment methods we're used to will still be here, right? So, for example, most of these other things can serve as layers on top of Bitcoin. Bitcoin is more of a settlement network. It does have the Lightning Network for fast moving exchange as well, but I think that a lot of this is under the hood for most people, and we'll still have a variety of different ledgers that we can pay with.
Lyn Alden, the founder of Lyn Alden Investment Strategy, explores the prospects of a moderate economic downturn and delves into the concept of the most effective form of money. In the present financial environment, Lyn Alden expressed a favorable perspective on Bitcoin among the array of available currencies. She emphasizes that Bitcoin's main role is that of a settlement network. The Lightning Network has gained traction since its launch in 2018, hitting a total value locked of $140 million, but this is relatively small compared to Bitcoin's $580 billion market capitalization. During the interview, Alden mentioned that Bitcoin's potential to become a prevailing form of currency hinges on its ability to attain broader adoption and increased liquidity. Bitcoin adoption has undeniably won the hearts of numerous established companies, and one of the notable names embracing the digital gold is Microstrategy. Michael Saylor, the co-founder and chairman of Microstrategy, disclosed that the company added another 467 Bitcoin, amounting to $14.4 million. With its latest addition, MicroStrategy now holds a staggering 152,800 Bitcoin, valued at approximately $4.53 billion. This significant move is poised to have a ripple effect on the cryptocurrency market, further elevating the reputation of Bitcoin adoption as well as digital assets. Alden foresees that as traditional fiat currencies steadily erode in value due to inflation, while Bitcoin's controlled supply remains consistent, the allure of Bitcoin will expand to encompass a larger global audience. In economics, Gresham's law is a monetary principle stating that bad money drives out good. The law states that any circulating currency consisting of both good and bad money quickly becomes dominated by the bad money. Alden points out that Bitcoin doesn't neatly conform to the conventional dynamics of Gresham's law, as it doesn't encounter the identical challenge of exchange rate fixation. Given the current circumstances, where Bitcoin is subject to taxation and still occupies a relatively specialized position, Alden indicates that its primary function seems to revolve around serving as a store of value. Let's direct our attention to the video. But before we do, please ensure you've subscribed to the channel and activated the notification bell for future updates.
I think that'll generally only be the case if Bitcoin is much larger and more adopted and more widely held and liquid. So generally, you see, money serves as multiple different solutions. So it's store of value, it's medium of exchange, it's unit of account, and generally it goes in that order. So we shouldn't expect to see a lot of merchants accept Bitcoin unless a lot of people hold Bitcoin. So it's kind of like that flywheel that has to happen. And so I think at the current time, in certain countries, it's more of a medium exchange. But for most people, I think the most users of it are holding it as a long-term store of value that's globally accessible wherever they go. So for example, if I hold gold or equity as a store of value or a house, I can't bring that with me globally, whereas Bitcoin I can. And so for people who that that attribute is relevant to them, or they're looking at it as like a tech play. They think, okay, this is just structurally going to adopt over time and it'll appreciate for that reason. Right now it's in more of that store of value phase. But I think in general, until you have more people hold larger amounts of their cash balance in it, you wouldn't necessarily see a lot of merchant adoption. But I think it's mostly a matter of time, which is that if we 10x the number of people holding it, if more people hold a larger amount of it, and part of it's just its own hardness, basically as fiat currencies keep diluting over time, and as Bitcoin stays with its very stable and decreasing monetary issuance, I think over time that appeals to a larger and larger global audience, and then it starts mattering. And the way I'd put it now is that in any one country, obviously the local currency is by far the dominant medium of exchange. But if you think of assets that you can bring globally that are money-like, I think Bitcoin is already in one of the top 10. So for example, I have Egyptian currency, I have Norwegian currency in the drawer next to me. And if I were to go around in a 10-mile radius trying to find someone that will accept those, it'd be pretty challenging. Whereas I could actually buy something in Bitcoin easier than I could with those monies, which of course is not the case in Egypt or Norway. And so, Bitcoin doesn't really have that center of density that most other monies have. But much like dollars internationally or gold coins internationally, I think it's already a pretty saleable international money, and it's just a matter of time before it becomes more entrenched, I think, on a denser level like that. So Gresham's law applies in a circumstance where you have some sort of artificial exchange rate. So if you, for example, have a gold and silver peg, and if the international exchange rate is 15 and a half to 1, whereas you're trying to do it at 15 to 1 or 16 to 1, then one of them is overvalued in your country relative to the other. And so the one that ends up being undervalued either leaves the country because global arbiters come in and basically make use of that exchange rate differential, or people hoard it. They want to spend the overvalued money into circulation, and they want to hoard the undervalued money. And so Bitcoin doesn't have that exchange rate fixation issue. Instead, the kind of the artificial issue we have is that because Bitcoin transactions are taxable events, that I think serves as a form of kind of Gresham's, we call it Gresham's friction, right? If there's a friction on a good money, we don't want to spend it. So every time if I were to spend dollars of Bitcoin, if I want to spend the Bitcoin, I have to think, okay, I'm going to create a taxable event here that I have to register and, keep track of in my accounting. And so I think that as long as we have this environment where there's taxation on Bitcoin and Bitcoin is still a relatively niche asset, I think the predominant use case will be that more store of value. And I think only when there's, say, a very large percentage of people in a given country that are holding Bitcoin and basically saying, okay, I want to be able to spend this more. Eventually, the laws can change to reflect what people want to use as money.
In the interview, Alden highlighted the increased attention on interest rates during this year's spring and summer. She also noted a noticeable deceleration trend, which suggests a potential risk of a recession either later this year or in the near future. Philadelphia Federal Reserve President Patrick Harker on Tuesday indicated that the central bank could be at the end of its current rate hiking cycle. A growing number of economists, who were previously predicting an impending recession, are now optimistic about the U.S. achieving a soft landing. This refers to a gradual growth slowdown that avoids a sharp downturn. According to a recent survey conducted by Wolters Kluwer Blue Chip Economic Indicators, economists assess a 50% likelihood of a recession occurring within the next 12 months. This figure has decreased from 56% in July and 61% in May.
But one thing I've been tracking throughout this, kind of spring and summertime is that, throughout 2022, so many people are focused on interest rates, whereas I think the deficit's not getting quite enough overall focus. So during 2022, we had a narrowing deficit in large part because taxes were much higher that year because they were based on 2021 capital gains and other economic impacts from that kind of boom year. So 2022 is this period where the fiscal expenditures were kind of winding down somewhat, and the tax revenue was winding up pretty well. And so that was kind of a contraction event. It was also Fed tightening. So most things were bad for the markets. Whereas this year, it's almost like we've gone far enough that now we actually have widening deficits again. So on one hand, obviously the COVID era types of stimulus have wound down, but we're still running these background structural 6 to 8% of GDP deficits. And then ironically, as they increase interest rates, they blow out that deficit. And so they put pressure on some areas of the economy, but then these other areas of the economy, wealthy retirees, basically like a bunch of different types of segments of the economy are still spending pretty aggressively. Now, it's when you look at manufacturing, when you look at the PMIs, when you look at most types of indicators, I think we still generally see deceleration towards a risk of a recession later this year or next year. But I expect it to be kind of mild and certain sectors to be in a recession, whereas others might not be because they're not equally affected.
Bitcoin's potential to become a prevailing form of currency is largely dependent on its ability to achieve widespread adoption. This will require businesses and consumers to be willing to accept Bitcoin as a form of payment. Bitcoin's limited supply could make it more attractive than traditional fiat currencies as inflation continues to erode their value. However, Bitcoin is still subject to taxation and other government regulations, which could limit its appeal. This concludes our discussion for today. We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.